This is the euro dollar analysis for Thursday, 26th of October. Now, let's just have a look what happened on the 25th. So on the 25th, we had a continuation of the move upwards, and let's just grab the pen. We've had this continuation of the move upwards. I did say I wanted to see how prices react in and around the 200 and the 400 here in black, and the 200 period moving average here in blue. And let's just clean this chart up a bit. And we didn't get much of a reaction in around this area here. Instead, we had strong momentum and a pretty strong break of the 200 and the 400 period moving average just off this one candle here. Broke above this 1788, this minor weekly level, and we've come all the way up into this 1810. So on this 1810, it's also pretty clear that we have come up, formed a bit of a bull flag, and we're getting a bit of a break to the upside. So as we are seeing the break of the bull flag to the upside, our next target is going to be this. Let's just get this. Our next level is this 1830. So we've had the bull flag, but we're looking at 1830 for potential selling, all the way back down to possibly this, possibly even 1788. But ultimately, the major levels at 1770 before a possible retest up at that 1830 and likely a break. Now, if we do successfully navigate 1830, we'd like to see a strong break, hold it for a little while, and then move upwards, possibly to test in and around this 1860 where we did see some selling before. If we do successfully navigate 1860, the very next level above us would be at 1910. It is just under 100 pips away at present, but we definitely have to bear that in mind at 1910. If we do break and hold 1830, that will be the next level above where we might see some resistance. Also this minor level here in and around the 1860s. If we do go up to 1830 and we do break down again, we'll be looking at that 1770. I can't imagine it'll go much further than that, but further retracement down to 1728, I would expect to be the lower end of the range, unless there is a pretty strong news catalyst. I wouldn't anticipate prices coming all the way down to 1710. If we do go down all the way down to 1710, we'll be looking around this 1680 to 1710, where we do have the dynamic supports of the 200 period moving average sitting at 117 currently on the weekly time frame. The 20 period moving average, sitting at the 117 level on the weekly time frame, and the 200 period moving average sitting at 1680. These levels may act as dynamic levels of support for prices to bounce for a possible retest in and around that 1770 or in and around the 1728. So let's just have a look at the weekly time frame. If we can get this chart. Let's just keep it at that. So if we have a look at the weekly time frame, that's where we are. It's going to be pretty clear. Nothing's going to change from yesterday, really. But on this weekly time frame, we can clearly see we're in an uptrend. We've had a couple of bull flag continuation patterns. We've come up to this 200 period moving average. We've pulled back from in and around that 120 all the way down to this 200 period moving average here in blue. And we've also got a 20 period moving average here in red, and these are both sitting in around the in the zone between 117 and 116.80, so they will act as support. We do seem to, based on these candles that are forming here, we do seem to be putting a bit of a base. So the next likely move is to the upside to possibly test this 1910 and this 2030, and above that 2092. So if we do go down to the daily time frame, and we'll see on a daily time frame, we'll see a continuation of the inverted hammer that we mentioned yesterday. So let's just go down to the daily time frame. If these some reason the charts are acting somewhat problematically, so scroll over here. So on this daily time frame, we had that we've had a bit of a buying on this bearish candle, which is a continuation from we had a strong selling on Friday. We had a small continuation on Monday. We did see some buying it into the end of the day, and Tuesday we did have the inverted hammer. So on Wednesday we had a pretty strong close to the candle. It's a bullish day, pretty strong close, so we would expect continuation all the way up into this region here where we saw selling in and around that 1855, 1860. We'll see how prices react there, whether we do enter range bound, pretty range bound, in the sense that our lows will be down at the 117.10 level, and the upper part of the range will be in around that 1860. If we do sell back down, we've already identified levels where we would expect prices to sell back down to. But if we do see continuation, we do successfully break above this 1860, 1910 will be our target. So that should wrap up the euro dollar analysis. So before I go, LCS, like, comment, subscribe. Thanks for watching.